At the beginning of this year and toward the end of last year, I made some pivotal decisions when I was investing my money into individual companies because so many people are finding value. Obviously, in small caps, the Dow, half the NASDAQ stocks are trading down like 30 to 50%, the likes of PayPal. But unfortunately, sometimes the trend is your friend. No YouTuber is discussing this, but if there's been one trade that has been working outside of fundamentals, that is bank stock, folks. I mean, just take a look at this. I recently purchased, obviously, Royal Bank, which I've discussed in my corporate account. And a lot of people said, oh, you're overpaying for the banks. Why are you buying them here? Look at how much I'm up on Royal Bank, almost 15%. I have barely held this stock for a month, and look at how high it's up. This is a conversation that I think is broadly being underlooked, and it has a lot to do, obviously, with interest rate hikes, which we're going to discuss, but look at what's happening here. So many of us have been fixated on the rapid growth of tech stocks, which hopefully will have some kind of resurgence in the mix of the Fed meeting at the end of this month when we get those Q4 earning reports, but it doesn't matter what you're buying. Bitcoin, the indexes, everything has generally just been up, down, up, down, up, down, and even the likes of BABA being probably one of the best value stocks you can buy for growth is still not catching any traction this year. And even your consumer discretionaries, which typically bode well in a hyperinflated market and an interest rate raising environment, have just generally been flat for the year. But every day I go through my banks, it's like they're rotating from all-time highs. Some of these REITs kind of flatlining here, guys. I mean, your utilities had a huge sell-off at the beginning of the year. Even TELUS, one I like a lot, hasn't been able to crack 30. And it's just like, it's just kind of going to be this broken record of up, down, up, down, up, down. But let's kind of just scroll through this. I mean, look at Bank of Nova Scotia, probably the worst performer of the bunch, up 1.57% year to date. Keep in mind, we are barely 2 weeks into the year, but take a look at Canadian Imperial Bank, up 11.5%, which, by the way, everything I'm showing you here is generally all-time highs for these companies, which can't be said about a lot of stocks that have been rallying because they still got to catch up to where their recent highs were. Royal Bank, up 6.51% this year. Toronto Dominion Bank, 3.11%, which I bought at the very beginning of this year in my tax-free savings account. That's 6,000 contribution room to my TFSA. Half of that went straight into Toronto Dominion Bank because I've been saying this, guys. Banks, man. These bloody banks. Look at Bank of Montreal. We're going to look at the U.S. ones here because this one's up 4.76%. One more Canadian bank, though, first. We've also got the National Bank of Canada, which hasn't been doing the best, but still up 1.73%. You can't lose buying these right now. Look at Citibank on the U.S. side of the border, 7.72%. These are the smaller cap banks. U.S. Bank Corp, 10.69%. Wells Fargo, what a comeback at 11.14%. This is an entire year's worth of cap gains, typically from the S&P, right, that are just locking in within a couple weeks to start the year. Look at these recovery charts. And of course, Wells Fargo's got to rebound after all that political insanity that went on within their business of obviously a little bit of a corruption going on with these obviously incentives they gave to kind of employees handing out bank accounts. So they were opening like multiple bank accounts for their clients, which is just a lot of FUD, but still it wasn't FUD. It was like a reality that kind of hindered them and caused them fines. But look at the rebound. Man, if you bought those dips, congratulations to you. And here's a Buffett favorite. We've obviously got Bank of America up 6.43%, just crushing into those all-time highs, man. Banks, well, actually, it hasn't recovered, I guess. The U.S. banks are so different than the Canadian banks, man. When I look at those long-term charts, it's like a night and day difference, is why I always say I'd rather buy Canadian banks, higher dividend yields, consistent increases, very little cuts, if not any cuts at all, and none of this volatility from these financial crises has survived all of them beautifully, baby. Look at JP Morgan, the largest bank the U.S. has to offer, a large cap, almost in the S&P top 10. My God, guys, up 4.74%. The likes of Apple, Tesla cannot compare at this current state of time. And all of this is going to continue to be a conversation of interest because Bank of Canada will hike its rates this month, according to JP Morgan. Economist at JP Morgan expects the Bank of Canada will raise the benchmark interest rate as of the January 26th meeting ahead of the central bank's own timeline for liftoff. I mean, come on, guys. Based on the rhetoric from the Bank of Canada in December, it was clear that labor market dynamics and outperforming economic data had created heightened concerns at the bank that the output gap was closing more rapidly than expected. And this conversation is broadly probably going on globally right now because obviously it's the same talk at the U.S. because we know the Federal Reserve head Jerome Powell made some hints that they're basically going to be looking at raising interest rates in March, and I wouldn't be surprised if they increase them faster than obviously everyone's been anticipating here, folks. So when it comes to the bank stock, should you be buying them here? I don't know. I'm not a financial advisor here, folks. I'll buy them. I've gladly been buying them. I look to potentially buy more as I continue to balance that sector of my portfolio, which makes up almost 20% of my entire portfolio, which doesn't come near to the impact of tech stocks. But the reason that I've kind of done this is because obviously when things get volatile, like tech stocks selling off like they have been or flatlining, you're kind of getting this balancing act from this other sector of the market, which again, I don't know why I can't find one YouTuber other than outside of a few Canadian YouTubers are actually talking about the rally in bank stocks, and why I always believe the trend is your friend. It doesn't matter how much you want to beat your head against the wall about stocks that you think are undervalued or some penny stocks, which I think there's a boating well of great companies within both sectors, in the Dow and in the NASDAQ and in the Chinese sector. But it's a matter of finding the ones that have traction and waiting for the ones that don't to get traction. There's no problem missing out on a 10, 20, or 30% bump in a company that's been trading down 50, 80%, guys. But there's no point buying into a falling knife when we have no idea when the reality kicks back in for them and they start kind of, especially if they have bottom line EPS or just actual revenue numbers or some kind of asset value that's increasing. Like that takes a while for the market to have a realization about, but you do not have to sit in those companies and wait. There are opportunities out there where you can still make returns in the near term and hopefully over the long term. Now, again, banks getting expensive, guys, but they're going to keep rallying at 10% every 2 weeks. Probably not. That's probably not going to continue, but damn it, I really think it's probably going to be one of the most appreciating sectors this year. So I've kind of, placed my chips where they lay, and we'll see how this unfolds. But I'm just telling you the truth, guys. So let me know what you think in that comment section below. Stay cool, stay awesome, and I look forward to catching you in the next one.